Hello and welcome back to another Stonksy video. Today I'm going to be showing you the benefits on setting limit orders, exactly how you can utilize them, because you may not realize it, but it can be really effective, and of course mean that you don't miss out on entries, take profit, and of course then volatile moves in the market when you might not be at the charts, you might be asleep, or you might just be busy. So they can be really handy, obviously a really useful tool to implement into your trading, and I'm going to show you how you can utilize them on BLOFIN, but also obviously list the key benefits and tell you exactly why I'm a big fan of limit orders. So do make sure you drop a big like on the video, make sure you subscribe, and of course make sure you sign up to BLOFIN. Links in the description, and of course you can still grab your Stonksy account at your first month discount. That is down there as well. Do check it out. But let's get into the video and get into it. So of course limit orders is one of the type of conditions that you can utilize when you're opening a trade, and of course works alongside the other conditions as well. Now, limit orders are very useful for a few different aspects, and one of the primary ones is the fact that you can set a trade to trigger and then you can forget about it. So for instance, if you are doing something on the weekend and there's a level you want to enter long or short, obviously for while you're sleeping, or in general, if you just want to set and forget a trade, say it's like a high time frame key level, and we'll run through an example now on that, then you can do that, and then the trade is there to trigger, and you might forget about it, or you might not be around to take advantage of that, but you've always got that safety and that security of your trade being in there in the order book, and of course waiting to trigger should price come into there. So let's take a look at an example now, and I'll show you exactly how you can set a limit order, and then we'll cover the other key benefits to it as well. So what we will do now is we will set a limit order on Bitcoin, and I'll show you exactly how it works. So let's just say, for example, we want to set a short at 120,000. Now obviously we're on limit, we're on 120,000. Now bear in mind you can actually set limit orders for just close to market if you wanted to. So obviously you can mark it open if you wanted to just open it straight away. But say you wanted to pick a price out the order book, or you wanted to set an order for close to the price, say up here or down here. You can also do it that, so you can do it literally anywhere that you want. But let's use 120,000 just as an example. And then let's just use all the margin in the account. We're currently on 1010 X leverage, which is fine for this. You can also set your take profit and stop loss triggers if you wanted to for that limit order. So obviously that will then go into the order and apply should it be triggered. So you can do that in there, and also you can go into advanced settings on this as well if you wanted to do advanced settings for take profit and stop loss for this limit. But let's just open it there, and then when that's open, obviously firstly it will obviously appear on the chart, so open limit short, so that's the order there waiting, and then it will go into your open orders bit there. So from here, obviously you can modify it, any of the conditions. You can also cancel it. You can also just go on and directly cancel it on the chart as well. If you just click that and click the X, then that will cancel the order too. Now the main advantages of this are what I previously mentioned. You can set an order for at a key level, so obviously support, resistance, if you're looking for liquidity sweeps or whatever it may be, you can have an order there waiting to trade the reversal, whether it be up or down. Or of course, if it's say a high time frame key level and you're waiting for price to come in for maybe a large swing short, and you obviously don't want to miss it if you've been waiting a while for that to happen, it's good to have an order in there as well waiting, just in case obviously price comes into there while you're sleeping, while you're busy, whatever it may be. But also it's good to just have the order in there, because then you can have your plan in place, and then you can let it play out exactly how you want without actually having to then rush onto the exchange, open a trade, obviously put all the conditions in. You can plan ahead, and obviously preparation is key. Now when we think of obviously opening trades, limit orders, all that stuff, we typically think of futures trade, using perpetual contracts, but limit orders apply to spot positions as well. So for example, we've gone over to the spot section now, and you can apply this to Bitcoin, any alts, whatever it may be. Now, this is really key, especially for, say, your lower cap altcoins, maybe even your mid caps, because you can set limit buys and limit sells in there and have them waiting, obviously using whatever it is you're holding in the account, and have them in place ready to take action. So obviously, if you're looking to buy at a key level, obviously you can utilize your USDT in the account and have them orders waiting at the key level to buy. Alternatively, if you're holding an asset and you want to sell it, or you've got say a couple different levels, say take profit 1, 2, 3, you can have them all inputted on the order book, and they're waiting for them to trigger. Now, this really applies to some of your more liquid altcoins, obviously the ones that move fast, freely. Now, let's just take, for example, this one, which is the current daily gainer. Now, the likelihood is, obviously, maybe you won't be holding, you know, some of these, obviously, unless you're buying near enough everything and anything that gets listed. But forget the ticker for a second. Let's just say this is just a low cap meme, mid cap meme, whatever it may be, even a large cap meme, or just obviously an altcoin in general. You know, them ones that get the 10, 20, 30% pumps, maybe off some news or whatever it may be. The advantage of having limit sells in, obviously, for pumps, is you don't miss a chance for any sort of fast and thin move into a key level. Then obviously it retraces quickly. So for example, you know, this, you could have, forget the ticker, say this was just any altcoin that, you know, you hold or interested in or whatever it may be. You could have, you know, take profit 1, 2, 3, all in limit sells. And then obviously these would trigger. You wouldn't need to be watching the chart. Say if you miss a pump, you know, them quick 5, 10, 15-minute pumps that go up and down quickly, especially for those that get listed. You know, if you think of the Upbit listings on, you know, potentially Binance, Coinbase, whatever it may be, them ones that cause the big pumps, or just obviously news pumps, you can have limit sells in there to take advantage of fast moves into key levels without obviously having to monitor each and every ticker that you hold. Or, of course, if these happen overnight or throughout the day when you're not looking at the chart, whatever it may be, you can have limit sells in, ready to take profit, take, obviously, money off the table without having to do anything, just obviously waiting for price to come into them levels. Now, that is a really key thing to obviously take away from this video, is the benefit of using limit orders as a whole for obviously triggering trades, whether it be short, longs, obviously having them set also with take profits and stop losses to have them safety measures in, and obviously for taking profit off the table embedded into them limit orders, but also using them for spot, you know, having your take profits in there ready to take action should you miss the pumps on coins, or obviously then fast news events or listings or whatever it may be. You've then got obviously everything covered. You've got your levels marked on, you've got your coins ready to sell, obviously without you having to physically do it when price comes into there. So obviously key preparation, and obviously something to take away for you to potentially utilize. Now, what I mentioned before was obviously these high time frame moves. Now, obviously these are ones where, you know, price isn't going to get there in a day. Potentially, obviously ETH could. You know, we've seen ETH pump 10% plus on many occasions, so it could get there. But, you know, especially for, you know, maybe if you're planning ahead, you know, by a couple of months, maybe you had this in from down here or whatever. But what we can see here on the ETH weekly chart is very clearly you've got this $4,100 level, and we hit it once, we hit it twice, but also, you know, in and around 4,000 is massive resistance for ETH. But if you particularly look, we've got two equal highs here, haven't we, at 4,107. Now, there is obviously high time frame liquidity and plenty of that above here, if you're looking at it, because of the nature of how it's rejected around the $4,000 to $4,100 region. So we know that there'll be plenty of liquidity above here. There'll probably be plenty of stops as well, waiting for obviously the market to take. Now, this is one of them key preparations where this could happen very fast. It could maybe pop above, stay there for a bit, and then drop below. Or, obviously, alternatively, it could break above and then go on a route to all-time high. We don't know. But, obviously, if you're looking for reversal points, this could be one where, in theory, you know, you could have a limit set there for price to pop up, obviously, trigger. Now, whether it distributes for a while or if it's a quick liquidity grab and then drop back below, then you're positioned then. And, you know, you've planned ahead and you're just waiting patiently for that trigger on ETH. But this is just one example, not to say, you know, that you should go and short this or have a limit short on there, or it will definitely, you know, grab liquidity and then reject and then drop back below. But as an example, looking at high time frame, you know, this is obviously one that's staring us in the face at the moment for, okay, big resistance zone for ETH, there's clear liquidity above. What's it going to do? Should it get above there? And obviously, you know, potentially you could say the risk reward maybe there to take a short on there with, you know, your risk managed and have a stop in place. But that's one example of how you can set your limit there, and you're just patiently waiting to obviously take advantage should ETH come into there and should it reject and then drop back below. But yeah, all in all, limit orders, fantastic feature to use within BLOFIN, and obviously overall for spot and futures trading. make sure you do take a look into them. If you've got any other questions on them, or how you should utilize them, or if you've got trouble setting them, or whatever it may be, come into the live streams. Obviously, you can ask me live there. I'll answer it for you. Or, of course, if you're a Stonksy user, pop them in Discord. Always happy to help anyone. But that's it for today's video. Hope you've enjoyed it. Hope I've shown you the advantages of, preparation, particularly, obviously, not only with futures trades, but also you take profits or potentially buy orders using spot as well, because you don't obviously have to singly use them on futures. They can be really useful on spot, particularly, like I mentioned, for them less liquidity altcoins that move fast and thin upon any listings or news or whatever it may be. But yeah, please do make sure you drop a big like on the video. Make sure you subscribe, and of course, click them links in the description. Sign up to BLOFIN, grab your non-KYC account, and of course, sign up to Stonksy. Thank you very much for watching, and I'll see you in the next one. Bye bye.